Namaskar. Man lives on this earth with his needs. Needs may be for food, clothes, shelter, and for fulfillment of every need, some resources are required. Some money is required, some material is required. To get that money, to get that income, man does several things. Somebody does private job, somebody does many government job, and some of the courageous persons, they do the business also. Business involves much more risk, so that is why high level of courage is required to perform the business organization, to run the business organization. So business is run by some courageous person, and what is the purpose? Purpose is to earn some money, to earn some profit. So to know the profit amount, how much it is profit or how much profit not, to know the profit amount, how much is total revenue and how much is total expenditure. So revenue minus expenditure, that comes to profit. It's very simple. Very simple formula. Profit is equal to revenue minus expenditure. Revenue means income. So revenue minus expenditure is profit. Seems to be very simple. But now the question arises, what are the revenues? What are the expenditures? How many types of revenues? How many types of expenditure? How we are going to calculating? Just anyway, anyone can calculate the revenue and expenditure and comes to the conclusion of profit, or some standard format is there? Yes. For so many reasons, to maintain the transparency to the stakeholders, there is a standard format of recording the revenue, expenditure and profit, and that standard format is known as accounting. Yes, accounting is the process of recording the financial transaction. What type of transactions? Financial transactions. It should be in the form of money only. And what is the output? Output is the financial statements. Financial statements in the form of income statement, balance sheet, trial, cash flow, statement of the retained earning. Like these all are the financial statements. So it's better to understand the definition of the accounting unit. So American Institute of Certified Public Accountants, they are defining accounting as, accounting is the art of recording. Accounting is the art of, number one, recording, number two, classifying, and number three, summarizing. So as of now, three functions. Accounting is the art of recording, classifying, summarizing in a significant manner. There is a specified manner in terms of money. Yes, there may be several transactions. Transaction of keeping shirt and giving shirt, but that is not the accounting. Accounting means amount of the shirt, amount of the buying shirt, amount of the selling shirt. So if it is converted into money, that is only accounting. If it is not converted into money, it is not accounting. So accounting is the art of recording, classifying, summarizing in a significant manner in the form of money. What? Transactions and events. What are the things? Transactions and events which are in part at least of a financial character. All the transactions and events which are in financial character, that those are only recorded. So three things we have done: recording, classifying and summarizing the financial transactions. Then interpreting is the fourth, and interpreting the result thereof. So here four processes shown. Here, four functions of the accounting is shown: recording, classifying, summarizing, and interpreting, and resulting means communicating. Five process. That is what summarize here: recording of transaction, classifying transaction, summarizing transaction, interpreting and analyzing transaction. These are the functions of accounting, and these all functions has been mentioned in its definition itself. Right? Now we'll understand need to learn accounting. It assists in management, yes. It helps in planning, organizing and control of business, leads to increase in efficiency of business and profit maximization. On the basis of accounting only, the managerial person comes to know what to do and what not to do, where to cut and where to expend. So it in this way it maximizes the profit also. Accounting is an aid to decision making. How it is useful to anyone who makes decision? So there are several entities who make the decision, and how it is affected, let us see. Managers want to know if new product will be profitable or not. On the basis of the previous records, management wants to know whether they should launch some new product or not. For that they have to take decision. Then owners wants to know which employees are more productive. Investors wants to know if company is in good investment or not. Creditors wants to know if they should extend the credit, if they can extend the credit, for how much they can extend the credit and for how long. And government regulators, they want to know if financial statement conforms to requirement or not for tax liability. These are the attributes of the accounting. Then characteristics and steps of the accounting process. It's almost the same. Whatever characteristics is there, same is for process. So that is why I have mentioned at one place only. So first of all, from the definition itself we have seen it's a process of recording of transaction, classifying of transaction. So how it will be recorded? First we have to identify. So what we have to do? First we have to identify the financial transaction and events. Which statement, which transactions and which event is financial in nature. That first we have to identify. Then measuring the transaction. Now the measuring transaction means that financial transaction has to be measured in the form of money. Then third point comes recording of transaction in the specified manner. Recording means writing of the transaction in a specified manner. Single entry method, double entry method, that we will learn later on. Then classifying the transaction. First of all the expenses recorded at one place. Thereafter, these all transactions are grouped in, they are grouped in some special ways. Some classification is made. So on the basis of some ways they are classified. Then summarizing the transactions. Yes, after classification it is being summarized in the form of trial balance, trading account, profit and loss account, balance sheet, etc. Then analyzing and interpreting the financial account data. That is the almost prior to final, it is the analyzing and interpreting the financial data. What is the outcome of this thing, whether some profit is coming or not. Then communicating the financial data or reports to the user. Communicating the financial data to the user is the final step of the transactions. So these are the various steps of the transaction. We can understand it. Now what are the objectives? Objectives are to maintain a systematic record of the business transaction. Business transaction involves so much of capital, so systematic recording is required to ascertain the loss or profit. So next is to ascertain the loss or profit. Then to determine the financial position, whether the company is running in profit or in loss. If in profit, how much profit? If it is in loss, how much loss? What else can be done? So that has to be ascertained. Then to provide information to various users. There are so many stakeholders for the running of the company. creditors are there, debtors are there, shareholders are there. So they want to know the information about the financial information about the company to assist in the company to management for taking the further decisions. So these are the objective of the accounting. Now accounting is divided into three main branches. There are three main branches of the accounting. First is financial accounting. What is financial accounting? Recording of all the financial data, recording of all the transactions, that is known as financial accounting. That trial balance, balance sheet, profit and loss account, these all are the financial accounting. Then cost accounting. Cost accounting is the process of ascertaining and controlling the cost of product and services. So it's a cost accounting is intermittent. It is related to production only. Cost accounting is related to production. During the process of production, either some products are coming or some services are being rendered. So how much cost is coming to make a product, or how much cost is coming to make a provide a services. So that is ascertained by the cost accounting. Cost accounting is the person who knows how much is the total amount of one piece product amount. Then management accounting. Management accounting is a managerial level persons. They have to decide, they have to take further decision about the planning and controlling the operation of the entity. In addition to these three branches, there are some more branches like auditing, tax, fund accounting, government accounting. Forensic accounting is calculating damages and selling disputes in legal matters. Then fiduciary means third person's business. Now, what are the advantages of accounting? If this much job is involved in accounting, there has to be some advantages also, na? But nothing to worry. These all are somewhere we have studied just now in the form of characteristics or in the form of need. We'll understand it. Provide information about financial performance. What is the financial performance of the company, of the business? That is ascertained by the accounting process. Then provide assistance to the management. Management takes several decisions like planning and other things. For that, the accounting is required. Facilitates comparative study. Comparative study means keeping systematic records. Last year what happened, this year what is happening. So comparative statement is required. Then it helps in settlement of the tax liability. Yes, business entity has to pay certain taxes, and that taxes are calculated based upon the accounting only. Then helpful in raising the loan. Many lenders, they are giving the loan only based upon the financial condition of the company. If the company financially sound, they will give the loan, otherwise they will not give the loan. Then helpful in decision making. All decision making purposes, money per point has to be decided whether it is going in right direction or wrong direction. Accounting is having certain limitations also. Like accounting is not precise. It's a very long, lengthy process. So once it is lengthy process and man is involved, personal bias cannot be ruled out. Then accounting is done on historic values of the assets. Whatever accounting is done, it is based upon the transaction. Transaction is already done. Whatever already events done, whatever all transactions done, that is recorded. So that is why it is called accounting is done on historic values, and today requirement is present value, like that. Ignore the effect of price level changes. Price levels are varying. So when for comparative study, this becomes little bit problematic. Ignore the qualitative information. Here only quantity is mentioned. Quality is not mentioned. So that is a lacuna. Then affected by window dressing also. Then who are the users? Who are the users who are going to use this information? So there are two types of users: internal users and external users. Internals are owners, management, employee. They all are interested to know what is the condition of the business, to expand it further, to take decision further. External users are bank and financial institutions. They will decide on the basis of the accounting whether they should further give the loan or not. Investors will decide whether to invest the money in this company or not. Creditors will decide whether to lend the money or not. Government to decide how much tax liability arises. Then researchers, they do the research on what basis this is done and on what basis not done and what could be the outcome. Then consumers, the final is the consumer want to know financial condition of the company, how much that company is earning, how much that thumbs up and Coca-Cola is earning. Just product amount is 2 rupees, 3 rupees and selling at 30 rupees, 50 rupees. How much income is there? So that consumer is having some perception and like that he wants to know. So in this way, introduction to accounting is over. Now in the next lesson, we will be discussing basic terms in accountancy. Till that, keep on revising. It is going to help you. One thing more. First chapter is the introductory chapter. And introductory chapter is very important for at least those who are not having commerce background. Those who are having commerce background need not to worry. But those who are not having commerce background, for them understanding the introduction, basic information of the accounting is most important. If they fail to understand the basic information, next steps may be difficult to understand. Next chapters may be difficult to comprehend. So please keep on revising and it will help you in fetching higher marks.